Guys, I want to say thank you again for being here today. My name is Philip Resch, and I will be your host here for this basic needs presentation conversation. Idea here is to give you some ideas on how to approach clients, especially when it comes to basic needs. A lot of people have a race to get to the permanent insurance, but really today, the foundation of our conversation is going to be focused on this part right here, the income protection. So when you think about what we have here at Valor Financial Specialists, we provide the stories and opportunities to help you grow. You know, it's not always the products that you sell; it's really the stories that you tell. And when you think about income protection, there's a lot to it that a lot of people seem to miss out on. So, really, the big thing that I want to just kind of highlight or overemphasize really is a lot of the concerns that are happening today. So, in January of 21, we saw that a total of 52% of consumers actually have life insurance. And that's not just individual life insurance, that's employer owned or individual. And that's down from 10 years ago, 63%, down from 63% to 52%. So there was a major difference in, over the last 10 years, why people are not buying life insurance. You know, there's over 330 million people in the United States, and only half of them have some form of insurance. One could say, though, even what they have after talking today, you might find that they're underinsured and still need a conversation. You know, 42% of American households say that they'll have financial hardship within the first 6 months of a wage earner passing unexpectedly. And COVID really elevated or enhanced that concern or awareness, I should say, where 6 out of 10, had that increased awareness of the value of life insurance. And those who have actually tested positive are more likely to purchase back in 2021. So when we think about this and some of the concerns, I think even personally speaking, so when I talk about how you really kind of go about talking to clientele, the first thing is you should always speak from your heart. I could tell you personally in my own family dynamic, not my immediate family, but in my lineage, if you will, I know of a girl who at 27 got diagnosed with breast cancer, and a 38-year-old mother of two, single mother, diagnosed with stage 4 colon cancer. And that's just two people. My grandmother and grandfather is a horror story there too. So you can always even dip back into your own personal lives. I'm sure you probably have some stories that you could share with your clientele, because this type of stuff we have to speak with conviction, because of the fact that this is something that you don't just typically end up buying. No one wakes up in the morning and says, I think I'm going to buy some life insurance today. This is something that requires us as agents to actually promote, push, and really share with people to help them understand why it's so much, why it's needed. And again, we could do a better job. Only 52% of over 330 million people are covered with something. So again, we'll talk the basic needs today. Here's kind of our agenda. We're going to talk the basic needs, or the why we do this for basic term insurance, some solutions or special features that can help you kind of take that to the next level and help you grow in this industry, and some common objections. We're going to always come across some naysayers, some people who don't want to buy coverage from you, and they'll give you any various reason why, and then some action steps for you guys. So let's kind of dive in with the basic needs, or the why. Typically, when you think about life insurance, especially term insurance, as we're talking here today, there's usually three major reasons why people buy term insurance. So, and I'm not talking that it's cheap, okay? I'm talking the actual true needs as to why they do it, the coverage needs, the first in which is mortgage protection. So this is not my house. It's a beautiful house, but I do not have, a fancy fountain in the front. But if we think about mortgage in general, you look at June of this year, the U.S. mortgage debt is up to $11.4 trillion. Yes, people are still buying homes or second homes and things along those lines, but you'll see that the average mortgage debt is about $350,000, or your monthly mortgage payment is around, I'll just round up and say 2 grand. So this is probably not a house that you would see for 350, but nonetheless, just the average is about that line. Okay, so stock away that number in your head. A mortgage protection about $350,000 in average mortgage debt. And then you think to yourself, really, how will this be covered in an unexpected passing? You can always ask these questions. So what you'll find is the best way to approach a client is with questions. If you come in with a teaching mentality and chastising for not having stuff, or I shouldn't say teaching mentality, but the sales mentality, I should say, people are going to be detracted per se. But if you come in with that teaching mentality, questions like this, it'll have them thinking, because let's be honest, a lot of us today don't want to be sold. We want to buy. And so if we can help people, guide them to that solution like this, they'll be more inclined to buy. So never hurts to say, how will this be covered in unexpected passing? When we talk about paycheck protection, you could say income protection. Most people will resonate better with the word paycheck protection. Why? Because they are their own greatest asset. So if the faucet gets turned off due to unexpected loss, how will bills get paid? What's the actual plan? Most people use some type of evaluation of, say, 10 or 20 times income. And then you think, depending on how long they want that faucet to keep going in case someone has an unexpected passing. But most people don't realize how important their own paycheck is. They care more about getting the best cable plan, the best cell phone plan, maybe even getting insurance on that new iPhone that you bought. But yet you don't have insurance to protect your paycheck, which really runs the entire thing. So again, we have to use some of these techniques. What are people putting their money into? And why are they putting their money into that? Is it a tangible thing? But they forget the fact that they need to cover a basic foundation of their overall portfolio. Because if someone can't work, or a piece of the overall portfolio or your paycheck coming in completely stops due to unexpected loss, then your whole plan is just destroyed. So it never hurts to say, what's your plan? How are these bills going to get paid? And then my favorite cost of all time, children. So children cost, back in the day when I would do this presentation, it was like 2017 numbers. It was about 250 a kid. Now we're up to about $310,000 to raise a child. They say about 17 grand a year. And so if you think about that, if you have 2 kids, that's $600,000 right there. If you plan on them going to in-state school, tuition is about 120,000. For a 4-year school, postgraduate for those smarty pants. And then you think about it. So if I just took this number 310, and you say you have the average nuclear family of 2 children, that's 600,000. Then you add in the mortgage, as I told you, to stock that number with 350,000. We haven't even talked about the paycheck by itself, and we're already up to $1 million. So how well are your clients insured? If you can walk into a house and see they've got 2 kids, they've got a nice house, you already know right off the top of your head they need at least $1 million in coverage. And college, do you want your kids to go to college? Again, what's the plan if you're not around to help for that? So once again, we're just acknowledging that there could be a potential loss and what would be the situation. And I'll be honest right now, if you've ever had to deliver a death check, most of the time people don't say this is way too much. They always say, I wish I bought more when I had the chance, because it's so important to make sure you protect the needs of the client and customer over anything at this point in time. And there's a real easy way to do it. You have your basic needs calculation. So the idea of this basic needs calculation, very simple. So some people use acronyms. I've heard the DIME formula: debt, plus income, plus mortgage, plus expenses. This is fairly similar. So what you'll see here is you got your mortgage. Then it says, what's your monthly bills? So you could really count that as your paycheck. How many years are you going to do it for? So you take, say, $100,000. They want to do it for 10 years. There's $1 million. What additional expenses do you have? Funeral expenses, legal fees, unpaid medical expenses, student loans, credit cards, stuff like that. Children's education. So all of these are a plus. And then you talk about these two. Basically, you have personal savings insurance already in place, maybe some Social Security that you're going to get, and these two are really minuses. So you add all these up, you minus all these, and then you got your number. So it's a real easy way to figure out a calculation to help your client figure out how much total coverage they truly need. And then at that point, you can then figure out, based on their budget, what type of coverage you can provide for them. And so when we talk about, again, your common why you would buy term insurance, the real reasons: mortgage, income or paycheck, and children. So it's very easy. Kind of transition over to the solutions or some of the special features. So here, in the industry, we have the benefit of working with a lot of carriers. So these are some of my core carriers. I have about 40 at my fingertips. But once again, we usually have stronger relationships with certain carriers versus others. If you need F&G, we got them. If you need New York Life, we got them. If you need, Global Atlantic, they're up there too. So you have all the carriers, even if you don't see them on the screen. We pretty much have them all, enough to make you dangerous, to say the least. And so if you have the client who's spreadsheeting, they're going on to Policy Genius or even to like Costco or stuff like that, we can do the exact same stuff. Now, what you'll see is that in this realm, you have protective 14607, banner is the same, selected term is 2 cents more. You're really fighting over pennies when you look at the top four. And so what I usually like to do is I usually like to pick certain carriers. Like I don't really like Banner because Banner doesn't really have conversion products. And we'll talk about those in a minute, conversion privileges. AIG selected term, very cost efficient, but I have a better version of AIG, and we'll talk about that in a minute too. Protective is very much like AIG from a cost analysis perspective. They also have some pretty rigid underwriting. So we get down to Symetra. I've had some pretty good success with them in their non-med program. So it doesn't mean they're the best fit for everybody. So there's not one-stop shop. One carrier cannot meet all your needs. And so that's the beauty of where we are today in our independence. We have the opportunity to provide the right fit for the right client for the right price point. Because what works for me would not work for others. I would not fit in this upper category of preferred non-tobacco, so I would be looking at a different set of companies. And someone asked if they could see this again. So this is our carrier slides. This doesn't mean this is the end all be all. It just means that we have stronger relationships with these carriers versus the other one. And so let's think about some of the special features that are kind of, I would say, more important to really highlight or discuss with people. Because you look at some of these daunting statistics, 45% of US adults are concerned of a major health event could lead to bankruptcy. 41% of workers are not confident they'll have enough for medical expenses during retirement. 6 in 10 Americans live with at least one chronic illness. I guess it didn't show up well on the PowerPoint. There's supposed to be someone holding their heart here. Every 40 seconds, someone is having a heart attack, and every 60 seconds, someone passes away due to a heart attack. So when we think about our conversation, we can sell, just going back here, we can sell dirt cheap term. But really, when we think about what we're offering today, we're not offering just death protection. We're offering something that involves us not dying. So this is the new type of life insurance. Life insurance is not just for dying. So when you think about the type of protection that you can offer someone today versus what you could only offer them even 5 or 10 years ago, you'll talk about things like critical illness. So me being a larger individual, I fear things like heart attack, stroke, cancer, and bypass. So for me, I find value in something like this. If I could get a check from my life insurance policy to protect me if I had a heart attack, stroke, or cancer, I find value in that. It'll cost more than some of those other products that we have. But the idea here is that you have a different story to tell someone. In the absence of value is price. And if someone wants price, we got it. But if someone wants value, we have a better story for them. And the critical illness is probably one of the most important reasons why people get exited out of the workforce early. So if you think about that, you can use this to help supplement your retirement when you can't work anymore. When that paycheck stops, how are you going to continue living? Here's a great solution. Then we talk about chronic illness. You can't perform 2 out of 6 activities of daily living. So I hate to say it, but there's about a 90% chance that everyone here today is going to have some type of chronic illness during their lifetime. You can't perform 2 out of 6 activities of daily living: bathing, eating, dressing, toileting, transferring, or continence. You have to find a way to protect yourself against that. If you talk about things like Alzheimer's, Parkinson's, or dementia, the cost of healthcare is continually on the rise, and it's not going to stop anytime soon. The whole concern that we have today is that whole generation, they call it the gray wave, is getting older and older and older. Medicine is keeping people alive. It doesn't mean they're keeping them in the best conditions. It means they're keeping them alive. And therefore, you're going to have these type of concerns on the back end. So is it better to let the government dictate what type of coverage you're going to get? Or is it better that you help take proactive opportunities for your clients today to give them the right type of coverage that'll protect them in the future? In terminal illness, I'm not gonna lie, every carrier has terminal illness. It just sounds better in threes: chronic, critical, and terminal. But really, if you get that, you've been deemed you're going to die in 24 or 12 months, depending on the carrier, you have the ability to accelerate your death benefit. And so when we think about this, a lot of people are like, well, where can we go to get these type of products? There is actually several carriers here that can provide this type of solution. So I just put them up here in a spreadsheet, if you will, showing you. So AIG, Allianz, Anaco, Columbus, F&G, National Life Group, North American, and Transamerica all have these different types of riders. Now, once again, one size does not fit all. You could say that AIG has a strong story because they go up to 2 million on all their products, on every single one, and all risk classes. So if you get approved, you get the living benefits. It's a great story. Some might say, though, they're a little rigid, or they might have a little bit more of a hard time getting through with some of the offers, and some of the other carriers might give us a more lenient offer. Now, with AIG, with Anaco, with National Life Group, and a few others, they have what's called a accelerated program where they cut you a check, give you the money in a lump sum, and that's it, which is perfectly fine if someone wants a lump sum check payout. Now, if someone wants to just have, for example's sake, $25,000 for their medical concerns, say they had a heart attack and they need to pay the bills. Well, at that point, you may want to keep your life insurance. You look at companies like Columbus or National Life or North American who actually pay you out per issue or per claim. And so it's a different story. Does it make it any better or worse? No. It just really depends on the flavor of your client. So these can all be provided when you ask specific questions. Mr. and Mrs. Client, would you prefer a total cash payout if you have some type of claim, depending on what it is? Yes or no? Or would you prefer to have a percentage amount of the policy paid out to you and you still have some death benefit left over? Some people might prefer that more. You may have to do some financial and not financial, but more field underwriting to understand maybe your client might not qualify for a certain carrier as you're talking to them. And so a secret way of doing that is you can ask them on a scale of 1 to 10, 1 being 1 foot in the grave, 10 being you got the body of an Olympian. How would you rate your health? And if they say, well, I'm a 6, explain why. Well, I take medication for, blood pressure. I've got diabetes and stuff like that. And now you can start ticking off some of the concerns, and then you can dictate which carrier you want to go with. The beauty of this design, and the reason why you're here today, is that you have a friend in me who's been around for 16 years. So if you need help with something like that, dictating where you want to send the business to, that's where I can help you with that too. And what we think about too is conversion privileges. Now, this is a major thing that people don't realize is so advantageous for clients. So if you sold someone, say, let's say $1 million in term coverage, it was a choice between $100,000 IUL face amount or $1 million in term protection. And even though the commission was probably higher on that 100,000, the need over the greed, you'll go with the $1 million term. Here's the thing: is the conversion privileges in this type of solution long term? Again, we're not in this short term, but long term is going to provide you a better opportunity. Why is that? Because you're retaining the client's risk class. So they won't get any worse. You can convert some or all of it later for your client, and you don't have to go through underwriting again. So even though maybe you sold them that $100,000, that's it. Then they got to go through underwriting again if they want more coverage. But on this side, if you want to get them the $1 million term and then convert 100,000 next year, they still have 900,000 in term and that 100,000 in permanent, and then they can keep going on. If they want to convert more later, they can. What you're doing is you're creating a bucket of opportunity for yourself, and you're covering the overall need for the client as well. The big thing, rates have changed. So you're going to see some clients may have bought a term policy back in the day. Now all of a sudden, they're going to buy a permanent. The rates have come down pretty significantly as these products have continued to change. So back in the day, all it used to be was you could buy whole life. I'm not talking permanent insurance. I'm talking whole life, the dinosaur, the dividends, and this and that. Now you have IULs, which are more cost efficient. They reduce the overall cost compared to something like that whole life or even GUL. I'll pick on GUL too. So rates have changed, provide a better opportunity for clients to convert now or even in the future. Living benefits, let's also talk about that. Like if we think about even aside from conversion privileges, if you want to talk to a client and you want to just mention to them, They say they already have term insurance. Say, well, that's fine. Rates have changed. They've actually come down. We should still look at it. Or living benefits. You have the old insurance or the new insurance. If they say, what do you mean by that? Then you talk about living benefits, what they do. Does your policy have that? Let me look at it for free. And the cool thing about conversion privileges too is you can convert a majority of the carriers without being the writing agent on the original policy. There are some carriers where you have to become agent of record on the old policy, which is fine. You don't need it signed off by the prior agent, and you can become the agent of record on the old policy if you need to. But most of the time, most carriers will allow you to convert the term to permanent without being the agent of record on the old policy. So you don't have to deal with old agents. Your client bought it from someone else, but they want to convert it today. You can be that new person. Just to give you some examples here, we have a 40-year-old male who purchased $1 million term, say about 6 years ago at age 34. At that time, they were standard non-tobacco. They bought a 20-year term. Due to COVID and lack of exercise, et cetera, they're probably now sitting at a table C, which is a substandard. It takes a standard risk class and adds 25, 50, 75% on top of the standard non-tobacco rate. And so if we think about that, we got a conversion opportunity here where you have no new underwriting up to $1 million at that standard non-tobacco rate. Is just the new risk class of age 40. And so on the flip side, we have another agent who's doing a review with their client, uncover that they bought a term 5 years ago, have the ability to convert it to a permanent policy, even though they weren't the original writing agent. So the big perk on this too, if it's within the first 5 years, we have some carriers that have external term conversion programs. So if you don't like the conversion opportunity with their new carrier, say they bought a protective policy, but they like the different carrier for the conversion privileges better, then we can do an external term conversion as long as it's within the first 5 years. And so those are some of the benefits of the term insurance. We talk about living benefits. We talk about cost efficient. Some examples here of conversion privileges and what those can do. Now let's talk real quickly about some common objections, and how can we overcome these objections? So a lot of times these are the main ones that we see. It's too expensive, or already have it through work, already bought it from someone else, or just don't believe in it. So how do you come across these objections, and how do you provide a value proposition to them as well? It's not even so much about, hearing this and then having to think about it and come back to them. How can you answer them quick enough where you catch them back and they're forced to respond? So we think it's too expensive and say, well, that's a fair point. How much do you think it costs? So that'll catch them right off the bat. They're like, oh, it's gotta be, whatever. Well, if that's the case, then would you mind if I actually showed you how much the coverage would be? And if I could get you the coverage I think you need at the price point you're looking for, would you be interested? All questions, okay? You'll find that a lot of these are questions because it's a dance. You're going back and forth with this person. So maybe they say they already have it through work. That's great. I'm glad to hear you have some coverage through work. Did you know that they typically only cover about 4 to 5 times your salary? And because I know your portfolio, I walked into your beautiful house. I see your 2 kids running around here. 4 to 5 times your salary really isn't enough to fit your total portfolio. Matter of fact, you probably need X, Y, or Z. So once again, you got to think on the fly a little bit when it comes to a needs-based analysis. Also, I don't know if you're aware, but your employer, if they're paying for it, it's actually taxable. So your spouse or your kids aren't going to get the same benefit you think that they're supposed to get. So really, how does that help your family? Understanding that it's going to be taxable and you're not even going to get the amount you think you're going to get. And the big one is do you plan on staying there for 40 years? Most professional today stays with their company for probably about 4 or 5 years, some less. Like I know someone who has had, in the span of 10 years, 17 different jobs. They call it a professional resume. I call it job hopping. But if you think about it, your insurance doesn't transfer with you, or maybe the company will actually stop providing that plan and you're left without a plan. So it's always good to max that out, but also have some personal as well. It's transferable. And that's extremely important when it comes to basic planning. Say they already bought it from someone else. That's fine. Is it the old insurance or the new insurance? I don't know. Well, do you mind if I take a look at it? Maybe I could do a free review for you and see if I could save you some money, or offer you a better value proposition from what you have now to what you could get today, or what you currently have to what you could get today. And you don't believe in it. That's a very, very interesting one. It's hard to really change someone's mind when they say that they don't believe in it. And the basic answer I would say is, so what's your reservation in protecting yourself? It's kind of a punch to the stomach, right? What's the reservation in protecting yourself? Why don't you care about your family is a nice way of this is a nice way of saying that. So if you cared about your family, you'd make sure you had a foundational protection piece to it. Maybe they don't feel like wasting their money. Well, that's fine. We have permanent products that can help you leverage assets, have cash growth, and you still protect your family if you want to pay more for them. Really, what's the plan if something happens to your, family? That's the biggest thing. If you have a good enough plan, that's fine. I'll walk out the door today. But if you don't have a plan, you just don't feel like you need it, that's not a plan. That's setting yourself up for failure. So what I say is, what's your plan? As you talk to people, hopefully as we talk today, you thought of at least 3 clients that you could really have a discussion with on basic needs protection. And if you want, feel free to call me anytime. We can discuss this, see how you can approach them, and then execute on that. But the worst thing is that you don't say anything to anybody. If a client says no to you, you're in the same position you're currently in if you don't say anything to them. But in this industry, we're here to basically make this is a noble profession, right? We are there to help people when they need it most. So if you want to make a difference in this industry, why aren't you talking to anyone and everyone about this? It's basic, simple stuff like term insurance. You can even get people through the process in minutes with some carriers, depending on their health. And so I encourage you, really the what's in it for you. You get in front of more people, you get compensation for it, obviously. Term is not as much as some of the other products, but there's a rightful place for it as well. And think of it again as not the initial sale, but the eventual sale when they're ready to convert it. And what's in it for them? Well, we never know when time is up here. And the most important thing to understand is we need to protect it and have a plan and be ready for it. So if you want, cheap shameless plug, I always like to say, if you want to get more insight or when we're going to do trainings like this, I will usually post it on my social media accounts as well. So facebook.com/trust Valor Financial, Instagram @Valor Financial, LinkedIn, you just look it up, Valor Financial Specialist, you'll see the V. And I'm gonna get into TikTok soon. I haven't done anything with it yet, but I've got it. So more stuff on that as we move along. But really, this has just been a simple conversation on basic needs. Nothing too crazy, but wanted to say, thank you, guys, for coming today, and wanted to open it up for any questions if you have them. I believe I answered the one already here. So I'm going to stop the recording and see who has any other questions.